So you're in Peru and Chile. You're after gold. I think the big. Should we go? Let's start with the big stuff. Share price. You've been absolutely hammered since 2008. Yeah, well,
Forever.
2017 for a long time. You know, you were the darling for a while. I do remember people talking about you a lot, but since then it's been on the downward slope. What's gone wrong?
Well, I think, once you become a mine development company, people's expectations change. I've had a lot of people ask me the same question, and I'd say to people, well, look, if you're looking for the quick 10, 15, 20% increment in share price because of drill holes or drill results or exploration results, that's not us. We're actually in the process of getting a project ready to turn into a mine. This happened to a certain extent. This happened to us back in 2009 when we started Rio2. It took a lot of time to get traction in the market for people to understand and believe the story. And then once we did, everything took off from there. So, Rio2 started as a $12 million company when we acquired La Arena, and on the takeout with Tahoe Resources, we were $1.2 billion. So we did create value, we can create value, and we will create value in this company.
Okay, so yeah, I have seen the track record. It's pretty impressive. Those are big numbers, but that's history. We've got to talk about today. What did you start off thinking you were going to build? What was the business plan day one?
Okay, so what we did was when we acquired this asset, it had a pre-feasibility study, which was put together in 2014. Typical junior company pre-feasibility study, big project, big CAPEX, big MPV, everything big. Why? Because they were never going to build it, and they were looking to flip it, and it never happened. So we looked at the asset and we said, well, there's some analogies here between what we've seen at both La Reina and Shahuindo, which we both operated and built here in Peru. And we said, look, the way we started those two projects was to start small and incrementally build up. And we created a lot of value doing that. So going from a $400 million CAPEX in the original pre-feasibility study done in 2014 to our CAPEX today, which is about $115 million, is a big change. But it's completely doable now because of that gearing down of particular project. So with La Reina and Shahuindo, we geared down right at the beginning. We had some, we had the opportunity to build some pretty reasonable sized projects, which they eventually got to, but we started small, and we're going to do exactly the same.
So let me understand the timeline here. So 2014, it was another management team had done this PFS.
Yeah, let me give you a quick view of the
Please.
story. Atacama Pacific discovered this asset in 2010. It was a geological discovery. Albrecht Schneider and Carl Hansen, who were the two principals of Atacama Pacific, they drilled this thing out, and lo and behold, bang! They hit pay dirt and cobbled together a reasonable sized resource. And the problem they had was because they were exploration geologists, they just didn't have the ability to then take it that step further. And that's part of the issue with the market these days, is that a lot of companies out there with some good geologists, but at some point they need to step aside and let a mine development team come in and take the project and the company forward after they've done with it, because there's too many disasters of people that just don't know what they're doing in this industry. So in our case, we identified this opportunity. We thought that this was right down our alley, being a gold oxide heap leach project, and we acquired it and convinced them that they should be doing a deal with us.
Right. So what we've seen is the previous exploration team came up with a very large CAPEX number to build out a large-scale mine. You've come in, and I've seen this model work elsewhere with people like CRUX Gold in West Africa, where you say, well, let's start smaller, get some cash flowing, and then we can build it out from there. So this is more like a phase one you're talking about rather than defining the mine.
We try not to call it a starter project or anything, but essentially it is. I mean, it's a starter view of the project. And I think that's what's not translated through to the market, is the market's gone, oh shit, you've got 5 million ounces of gold here, but you're going to build this really tiny project. Why are you doing that? And so once again, typically a junior company would drill this thing, keep drilling it. We've got 1.4 million ounces of inferred resources here that we could pull a drill rig up to tomorrow, start drilling and convert most of that to indicated. But why would we do that? We've already got 5 million ounces of M&I before we even get to that point. So we're all about building mines, and that will translate to value down the track.
Okay, but it's one thing saying the market doesn't understand, but the reality is that's your fault. You haven't explained it properly, and that's why I ask management teams, what is your business plan? Now, you have, in 2 or 3 minutes, told me everything I need to know about what your business plan, I think. And I buy it. Let's get into early cash.
When I say the market, we started off with a reasonable valuation when we did the Atacama transaction. We then ran into this bad market. We raised about $7 million back in February of 2019. We had to put money together because we had to advance the project. So that was done very cheaply. What can we do? I mean, you've got to go with the market. The market says you're worth 30 cents at the time, whatever it was, and we took the money. And then later on, in August of last year, we did another financing. This time it was a $25 million financing. That financing was led by Eric Sprott. And a whole bunch of people came into that financing with Eric. When I say a whole bunch of people that I don't even know, I mean, they're mainly retail followers of him. And so they're the people that don't understand what they're getting into. I mean, they follow Eric, and Eric typically gets into stories that are exploration stories, putting out, drill holes and things like that. We're not one of those.
Okay.
He bought us because he could see us as being a little bit different to those other stories that he's been into. So the crowd that follows him watches that and goes, well, where's all the juice here? Where's all the sexiness here? Okay. And all the sexiness happened back when this thing was discovered. Now we're going to build it. As you probably know, in the life cycle of a development company, this is the quiet time, because here we go leading ourselves into the construction phase of the project.